Hey everyone, welcome back. We're going to take a deep dive today into Mexico's economic future. Specifically, we're looking at 2025. Our main source is a report from the Centro de Estudios de las Finanzas Públicas. That's CEFP for short.
Yeah, they're basically Mexico's economic think tank. They've analyzed the government's 2025 economic package, which is their plan for the year. We're going to look at GDP growth, inflation, all those other fun indicators.
Right, but we're also going to bring in some other sources to make sure we're getting the full picture. We'll be looking at surveys from Banco de Mexico, or Banxico, and reports from Citibanamex.
Because predicting the economy, it can be a little tricky.
Oh, yeah, for sure.
Like one of the things that really jumps out at me from all this material is that the U.S. economy is expected to slow down in 2025. And that, of course, has a big impact on Mexico.
Okay, so how much of a slowdown are we talking about?
Well, the Mexican government is forecasting U.S. growth to be around 2.7% in 2024, and then dipping to about 2% in 2025.
Yeah.
But Banxico's survey of private sector experts, they're painting a slightly gloomier picture.
Okay, so even when it comes to the U.S., there's a little bit of uncertainty there. But why should we care about a U.S. slowdown down here in Mexico?
Well, the U.S. is a major trading partner for Mexico. A slowdown up there means fewer exports from Mexico, and that could impact manufacturing jobs, government revenue, even tourism.
Wow, so it's all connected.
Exactly. It's like a domino effect. And on top of that, the U.S. Federal Reserve, they've started easing monetary policy. And that could complicate things even further.
Okay, so we've got a U.S. slowdown, an unpredictable Fed, and now we need to talk about interest rates in Mexico.
Yes, but before we get to all that, there are some other global risks to think about. Things like persistent inflation, geopolitical tensions. Those could also have a big impact on Mexico.
Right, okay, so the global picture's a little bit messy. But what about Mexico itself? What's the government's outlook?
Well, they're projecting GDP growth to be between 1.5% and 2.5% for 2024, and then increasing to 2% to 3% for 2025.
So they're feeling optimistic.
Yeah, relatively. But Banxico's private sector experts, they're not so sure.
Really?
Yeah, they're predicting growth of just 1.4% for 2024. And then a sluggish 1.2% for 2025.
Wow. Okay. So we've got this gap between the government and the private sector. What's causing that?
Well, we look at the components of GDP. We start to see some potential problems. For example, private consumption. It's been strong recently, but Citibanamex is predicting a slowdown in 2025.
Yeah, that makes sense. If people are worried about the economy, they're going to cut back on spending.
Exactly. And then there's investment. The CEFP report says investment growth will be strong in 2024. But Citibanamex is forecasting a sharp decline in 2025.
Oh, so that's not good.
No, it could really hurt Mexico's long-term growth.
Okay, so we talked about spending and investment. What about jobs?
Well, that's one of the brighter spots, at least for now. The CEFP reports that formal job creation is still strong. Like in October 2024, there were over 332,000 new formal jobs created.
Wow, that's a lot of jobs.
It is. But even with that good news, Banxico's experts are predicting a slightly higher unemployment rate.
So maybe just a little bit of a slowdown in the job market.
Which we'll talk about next time.
Okay, cliffhanger. We'll be back soon for part 2 of our deep dive, where we'll explore the fascinating world of Mexican oil. Until then, keep those economic thinking caps on. Okay, so we're back and ready to tackle that Mexican oil sector.
Right, because even though the government's not putting all their eggs in the oil basket, it's still a pretty big basket.
It is, so let's dive in. What's the outlook for oil production?
Well, the CEFP report projects a slight increase in production for 2024 and 2025. They're expecting around 1.877 million barrels per day in 2024, and a little bit more in 2025, about 1.891 million barrels per day.
Okay, so not a huge jump, but what about prices? That's the real question, right?
Exactly, and the government's using an average oil price assumption of $70.07 per barrel for 2024. That's way higher than last year.
That does sound pretty optimistic, especially with all the global economic uncertainty.
Well, Citibanamex doesn't seem to agree. They're projecting a lower price of $65 per barrel for 2025.
There's that gap again. The government's optimistic. The private sector's more cautious.
It's a pattern, isn't it?
It is. But I guess it makes sense. Forecasting is never an exact science.
Right. There are always different perspectives.
Okay, so we've got modest oil production growth and some debate about prices. What else should we be looking at?
Well, one area that's important is the external sector, how Mexico interacts with the rest of the world.
Right, in terms of trade and finances.
Yeah, exactly.
And one of the key indicators there is the current account deficit.
Which basically means a country is spending more on imports and other external transactions than it's earning from exports and investments.
So kind of like overspending on your credit card.
Yeah, exactly.
And a big current account deficit can be a problem.
Right. It can make a country more vulnerable.
Vulnerable how?
Well, it can mean they're relying too much on foreign capital. If those foreign investors get nervous, they might pull their money out.
And that could destabilize the economy.
Exactly.
So what's the outlook for Mexico's current account deficit?
The CEFT report says it will stay relatively stable as a percentage of GDP.
Okay, so not great, but not terrible.
Right.
But wait, I bet Mexico's experts have a different opinion.
You know it. They're saying the deficit could be even bigger.
Ugh, those gloomy guys.
Well, they're just pointing out the risks.
I know. But it does make you think.
It should.
Okay, so we've talked about oil and the external sector. We've covered a lot of ground. Are there any other big risks we need to be aware of?
Well, the CEFP report does highlight a few potential challenges, some we've already mentioned.
Right.
Global inflation.
Right, that's a big one.
It is. And then there's the risk of tighter financial conditions globally.
Because of the Fed.
Yeah, if the Fed keeps raising interest rates, it could make it harder for Mexico to borrow money.
Oh, okay, so that's not good.
Not really.
Yeah.
And then there's the U.S. economic slowdown. If that's worse than expected, it could really hurt Mexico.
Right, because of exports and tourism.
Exactly.
And we can't forget about oil prices.
Yeah, if those drop, the government's going to have a problem.
Because they're counting on that revenue.
Right. And then there are longer-term risks, like climate change.
Right, droughts, floods, all that.
Exactly. Those can have a big impact on the economy.
So it's a lot to think about.
It is. And of course, there are always geopolitical risks.
Right, things you can't really predict.
Exactly.
Okay, so we've got a pretty good picture of the Mexican economy now. It's a mix of good and bad. But I think the main takeaway is that there's a lot of uncertainty.
I agree.
So what should our listeners be paying attention to in the coming year?
Well, I think one of the most important things is inflation. If it stays high, it could really hurt the economy.
Yeah, that makes sense.
And I think the other big thing to watch is the government's fiscal policy. Can they manage their finances responsibly? Or are they going to get into trouble?
Right. Those are some big questions.
They are.
Well, I think we've covered a lot today.
We have.
And hopefully our listeners have a better understanding of the Mexican economy.
Okay, let's talk about something that's been on everyone's mind.
Yeah.
Inflation. What's the forecast for Mexico?
The CEFP is forecasting inflation to close out 2024 around 4.3%.
Okay.
And then it's expected to cool down a bit to about 3.5% by the end of 2025. But even with that slowdown, it's still above the Bank of Mexico's target range.
So inflation's cooling off, but not as quickly as we might like. With it still above target, how is the Bank of Mexico likely to respond? I mean, won't their attempts to control inflation potentially slow down economic growth?
Well, that's the balancing act they face. They'll likely keep interest rates high to try and rein in inflation.
Makes sense.
But as you said, that can make borrowing more expensive, which impacts both businesses and individuals. It's a tough situation, trying to control inflation without putting the brakes on economic growth.
It's a tightrope walk, for sure. Let's talk about the Mexican peso. What's the forecast there?
The CEFP predicts the peso will be around 19.7 per US dollar at the end of 2024. And they say it'll weaken a bit to 18.5 by the close of 2025. But here's where it gets interesting. Private sector forecasts, they're a little less optimistic. They're predicting it'll be closer to 20 pesos per US dollar for both years.
So a weaker peso. All right, let's add another layer of complexity here. Oil prices. The CEFP has some predictions here, too.
They do. They're projecting oil prices to average about 70.7 US dollars per barrel for 2024. But get this, they're predicting a big drop to $57.8 per barrel in 2025.
Whoa, that's a significant drop. What kind of impact could that have on Mexico?
Well, a weaker peso, as we said, means imports become more expensive, which could push inflation up even more. And if oil prices really do take a dive, it could directly impact government revenue from oil exports, which is a major source of income for Mexico.
Oh.
Yeah, this drop could put a strain on the budget, potentially affecting government spending on things like public services and social programs.
It sounds like a bit of a double whammy, huh? A weaker peso and lower oil prices.
Yeah.
Now let's turn our attention to the government's budget. What's the situation there?
Well, the government is projecting a budget deficit for 2025. They're planning to spend more than they expect to bring in.
What's causing this deficit?
A couple of things. They're planning to boost spending in some areas, like social programs, for instance. But at the same time, revenue is projected to grow at a slower pace. So that difference between planned spending and expected income, that's what creates the deficit.
Okay, so is this deficit a cause for concern? Or is it a manageable part of economic planning?
It really depends. The size of the deficit matters. A small, manageable deficit might not be a major issue, especially if it's used wisely to fund things that can boost the economy in the long run, like infrastructure or education.
Smart investments.
Right. But if the deficit gets too big or it keeps happening year after year, it can lead to a growing national debt. And if that debt becomes unmanageable, it can limit the government's ability to invest in essential services and programs down the road.
It's all about finding that balance, isn't it?
Exactly. Invest in the people and infrastructure to promote growth, but also keep a close eye on those debt levels.
It's a lot to juggle. And speaking of juggling, the report also flags some potential risks, things that could throw these forecasts off track. What are we looking at here?
Well, there are a few. Persistent global inflation, that's a big one, as it could keep pushing prices up within Mexico. And then there's the tightening of financial conditions globally. It basically means it gets more expensive for countries like Mexico to borrow money. That could pose a challenge.
And of course, we can't forget about the U.S. Earlier, we talked about the U.S. economy potentially slowing down. What would that mean for Mexico?
A slowdown in the U.S. economy, especially a significant one, would definitely have spillover effects on Mexico.
I imagine so.
Yeah. Reduced demand for Mexican exports could lead to job losses and slower economic growth in Mexico.
So Mexico's facing pressure from all sides. Internally, from managing inflation and the budget deficit, and externally from these global economic headwinds. It's a lot to consider. Let's unpack these risks a bit more after we take a quick break. Stay with us. We'll be right back. Welcome back to the Deep Dive. We've spent this episode really getting into the nitty-gritty of Mexico's economic forecast, and it's been quite the ride. We've seen some optimistic projections, heard some cautious warnings, and even talked about those big global shadows looming on the horizon.
Yeah, we've covered a lot of ground, from GDP growth and inflation to the peso's exchange rate, and even the potential for those oil prices to get a little, well, shaky.
It's definitely been a lot to take in, but let's take a step back for a moment. What does all of this actually mean for, well, the average person? How might these economic forces actually impact people's lives in a real, tangible way?
That's the key question, isn't it? Because these forecasts, they're not just numbers on a page, right? They have real-world implications. For individuals, understanding these trends, well, it can help them make informed decisions about their personal finances, career choices, even their long-term plans, those big life decisions.
Absolutely. So if someone's listening to this, thinking about their own future in Mexico, what are those key takeaways? What should they be keeping in mind?
Well, first and foremost, stay informed. Keep your finger on the pulse of what's happening in the economy, both in Mexico and globally, because things can change quickly. Staying aware of these trends, well, it can help you make those smart choices.
Knowledge is power, right?
Mm-hmm.
Especially in a dynamic economic environment like this. What else should people be thinking about?
Well, remember that the future, it's not all doom and gloom. It holds both opportunities and challenges. Yes, there are risks to be aware of, like we talked about persistent inflation, a potential economic slowdown, but there are also those positive trends, like the continued creation of jobs, investment flowing into key sectors.
Don't get caught up in the negativity, right?
Yeah.
It's about staying informed and recognizing that balance.
Exactly. And focus on what you can control. Take charge of your own personal finances, invest in developing valuable skills, and stay adaptable. That resilience, well, it'll serve you well no matter what the future holds.
Be proactive, be prepared. Great advice. Now, after looking at all this data, what stands out to you as the most important trend to watch? What's that one thing that's really on your radar?
For me, it's that interplay between global and domestic forces. Mexico's economy, it's deeply intertwined with that global marketplace, right? So what happens on the world stage, whether it's a shift in U.S. economic policy, fluctuations in those commodity prices, it's all going to have ripple effects in Mexico.
We're all part of a bigger system.
We are, but it's not just about those external factors, of course. What happens within Mexico, it's equally important. The government's policies, the business environment, the choices made by companies and individuals, all of those things play a role in shaping Mexico's economic destiny.
It's a complex ecosystem for sure, but understanding those dynamics, it's essential for navigating the future. We've just scratched the surface today. There's so much more to discover about Mexico's economic landscape.
Absolutely, and that journey of discovery, it's just beginning. Keep exploring, stay curious, and stay engaged because the future, well, it's always unfolding.
Couldn't have said it better myself. We hope this deep dive has given you some valuable insights and maybe sparked that curiosity to learn more. Thanks for joining us on the Deep Dive.
In conclusion, considering the economic insights and projections provided in the analysis of the 2025 Mexican Economic Package, It is crucial to reflect on how this data can inform your business strategy and optimize decision-making processes. To do this, it is essential not only to focus on the technology itself, but also to develop a comprehensive strategy. This includes business intelligence, with a geopolitical analysis of risks and opportunities, the optimal design of supply chains and efficient processes, soft skills training, and the promotion of health in the workplace. These are crucial topics for maintaining a healthy and productive workforce, which increases the likelihood of success in your business goals. I encourage you to visit Carlos Bastida's websites to explore his comprehensive portfolio of services, which includes these and many others. We provide customized business solutions and strategies designed to meet your specific needs. Together, we can analyze how to help you achieve your goals, optimize your processes, and develop effective strategies for your company's growth by integrating advanced technology and good business practices. I'll leave the links in the description of the video.